Hey everyone, welcome to another video on the channel. Today we're going to be taking a look at Starbulk Carriers Corporation, which is a dry shipping company. I wanted to talk about this stock because I had made a few videos about another shipping company, ZIM, and this seems to be another player in that space, which has also garnered a good amount of attention, so I thought it might be worth analyzing them as well. So first and foremost, I'm not a financial advisor. This is just for education and entertainment purposes. But if we look at the chart for Sblk, Starbulk, we could see that it's very similar to the rest of the shipping industry in the sense that we had this great run-up in June where we peaked out and then we completely collapsed in the beginning of July, and we've slowly been kind of fighting our way back towards the upside. So what's going on here? What's going to happen? What's the next move going to be? I don't know that, but we can hopefully look at some information and try to form a better opinion on how to play this or if to play it. So one thing I really like to look at, a very useful metric I find, is just looking at what Wall Street is itself saying about a particular equity. So in the case of Starbulk over here, we could see that there are analysts currently raising their price targets on Starbulk, but what I find the most useful is not this guy Stifle Nicolaus, but it's actually some of the other big money players. So when we look at the big money that is doubling down on Starbulk, we could see first and foremost our friends over here, Renaissance Technologies, which we had said also had a substantial stake in ZIM, that other shipper. They boosted their holdings in Starbulk by 638.7% in the first quarter, now owning more than 2.5 million shares. That is significant because, again, like as we've said, Renaissance, they've been one of the best performing hedge funds that are out there. I think their Medallion fund remains to this day like the best performing fund like on the market in history. So that's pretty impressive. And it's not just Renaissance, as we can see here. These other companies, Arrow Street is boosting their shares in Starbulk. Acadian Asset Management boosted their holdings, and they're boosting their holdings. Well, Arrow Street only by 2.3%, but they still, again, own over 2 million shares. Acadian boosted by over 5,000%, owning 1.5 million shares. And also Goldman Sachs. So Goldman Sachs more than doubled their position in Starbulk, now owning almost 1.5 million shares. So this tells us, I think, a few different things, which are, A, big money has just been pouring into this stock in the first quarter, which, it does nothing but bode well for the stock. I mean, I feel like that's kind of a misconception some contrarian would-be or current investors have, is kind of trying to outsmart Wall Street. You're not going to outsmart Wall Street. I mean, 99% of the time at least, you're not going to outsmart them. But what you can do is kind of understand the moves they're making and why, and see if you could maybe piggyback off some of their moves or kind of see where they're going with their moves and ascertain if there's any such value. So the fact that Goldman Sachs, Renaissance Technologies, all these other players are just pouring money into Starbulk, I mean, hey, maybe they know something that we don't, right? Or else maybe they have a certain perspective on the economy, given the vast amounts of data that they have access to that we do not have. So that's something to consider, especially in the context of what we've discussed in the past, which is the potential for an impending recession which of course is going to have a tremendous impact on Starbulk and all of these shipper companies for obvious reasons, right? Because there's a recession, demand for the goods that these shippers are shipping will decline. That's going to hurt their bottom line, or so the reasoning goes. So is that actually going to happen? Something else I thought was interesting, because it is really critical, is like the relationship in terms of what happens in China as well, because so many of these shippers, they're shipping stuff back and forth between China and these other markets. And as we know, China has just had a slew of its own issues in terms of, the Evergrande situation, and their housing bubble still hasn't really played out fully. And of course, there are lockdowns. So, and they're continuing to lock down. So this article, it's not recent, it's all the way back in April, but I thought it made a good point here or there that I thought were still worth touching upon, that are still relevant even today. So first and foremost, I thought this was interesting, the fact that despite the argument I just made, if there is an economic decline, some of these shippers may be able to effectively offset some of their losses, because they will be engaging in longer voyages with those shippers. So that is interesting, especially given the Russia-Ukraine crisis, because now all these shipping companies and other transportation companies are having to find alternative routes to deliver their goods, because they're not allowed to go through certain space and they're not trading with certain partners anymore. So all of that is just going to mean longer voyages for these shippers, which is just going to mean more money for the shipping companies, which if you own shipping companies, you're just going to make a few extra bucks. So that'll be good if you own the stock and that plays out. Because, that's the difference. Just to distinguish those shippers, the dry bulk shippers, from the other type of shippers that have trade oil and things and commodities of that nature. So that's kind of what they're saying, that the container shippings haven't really been hit that hard, despite the COVID closures that have happened in China. And there have been a bunch of lockdowns. Even since this article came out, there were further lockdowns. But I think it hits on a good point, which is the fact that, those lockdowns are going to have an impact, but the most important thing is just going to be the demand. If the American or whoever, the consumer, is still purchasing, they're going to be shipping these products out. That's kind of like the open and shut case. That's just kind of the way it is. So that brings us back to the recession argument. And if we're going to have a recession, if we're not going to have a recession, and how that's going to impact demand, because if demand is there, people are going to still buy stuff. Therefore, people are still going to ship stuff from China and these other areas. Therefore, these shipping companies are still going to make bank. So just something to keep in mind. I think we're still unable to really tell what's going to happen at this point, because the data is so mixed. Like Jerome Powell just came out and perhaps put the recession on hold, but there's still a lot of negative data in the economy. So seeing how that will play out is going to really determine how these shipping companies perform. But in terms of these shipping companies, again, I go back to what the analysts, what the big money interests are saying, which they seem to be pretty confident in Starbulk. So just something to keep in mind. Again, I'm not a financial advisor. I wanted to branch out. I've already made a few videos on Zim shipping company, and see if anyone was interested in other shipping companies. So let me know in the comments if you own Starbulk, if you're buying more, selling, holding, if you'd like to see more videos on this topic or other topics, or if there's any other stocks you'd like me to cover, and I'll catch you in the next one.